Well, joining me this week are Ivor Ries, Research Director at the broking firm EL&C Baillieu and a former Chanticleer columnist on the Australian Financial Review, Sydney Morning Herald business columnist Liz Knight, and Marcus Padley, author of Marcus Today newsletter and stockbroker at Patterson Securities, and a long-time regular on Inside Business. Welcome to you all.
Thanks, Alan.
Hey, Alan.
So it wasn't just BHP that reported, of course, it was Rio Tinto on Thursday night. Now, they came out with a pretty good underlying profit, but a huge $9 billion write-down on their aluminium assets, 60% drop in reported profit, and Tom Albanese and the execs forewent their bonuses. So, yeah. But is there a common thread between BHP and
deal
Rio?
of commonality between them. I mean, they're talking about earnings and whatever, but the market's really focused on what they're doing with all the cash. And they've been spraying the cash, essentially. You know, they've sprayed the cash, and they've made both of these companies have made seriously bad investments, and now their shareholders are paying the price. I mean, you could say this was the week that the two CEOs of BHP and Rio had their magma copper moment, because you know,
magma copper being the great disaster of BHP.
They took out a former CEO of BHP. They bought at the top of the cycle and then was forced to write off billions on it. Well, now, Rio Tinto has written off, $9 billion off Alcan. There's surely more to come. That's not all there is there. So not many CEOs survive a $9 billion write-off. There's someone around there who survived it, but I'm not sure that there is. And also at BHP, you know, the Petrohawk acquisition, it's not a year old yet, and they wouldn't get half the $15 billion they paid for it.
This is a shale gas
business. So we've got these two CEOs here who are putting a brave face on, but they're both pretty terminally wounded.
And they haven't really given any compensation to the shareholders. I mean, I think there was an expectation that there'd be some capital management, better dividends
special dividends out the door, capital management out the door,
and all they've got is somebody's, giving back their bonus or not taking a bonus. Yeah. And I think that's right. It's a huge mistake that poor capital management actually to date that they've invested in those assets.
And I think when both Kloppers and Albanese do the roadshow of the global institutions after these results, they'll cop an earful from their shareholders all over the world.
And let's not forget, BHP bid for Rio. When did they bid for Rio? The top of the market was the 1st of November 2007, top of the equity market. They bid for Rio on the 12th of November, 11 days after the top of the market. I mean, timing is everything at the end of the day.
And Rio said it was opportunistic. And
Rio said it was 2 ballparks away from what the company was worth, and the price had gone to $124, and it turned out to be 5 ballparks away, but in the other direction, because Rio collapsed to sort of $25.
Yeah, no, their timing has been shocking. I think it's really interesting to dwell a little further on those shale gas assets in the US, because since they bought them, of course, the price of the gas has collapsed.
Price of gas has collapsed, and he has to spend another $10 billion to make it work. So it's not a $15 billion bet; it's a $25 billion bet. And unless the gas price goes up in the United States, they're going to have to take a $10 billion write-off.
And there was a lot of speculation around, or a lot of questions being asked at the time this week when the result came out, about really how much longer they could sustain those assets only after a year being on the balance sheet at that price. Will there have to be a write-off? And I can't see. I mean, I'm not an accounting expert, but I can't see how much longer they could really sustain them at that price over a period of time, unless, of course, the gas price improves.
Yeah,
the other result this week was Newcrest on Friday, gold mining company, good result. Share price went down.
Well, this is, of course, the gold price last year was up 10% and Newcrest fell 28%.
And
it was supposed to be the gold play.
Yeah. Well, it's a worldwide phenomenon. You know, gold shares have not been keeping up with the gold price. And basically...
Why is that, though?
Well, there was the tendency of executives of gold companies during the middle of a gold boom to go out and buy other gold companies at a huge premium. So there's a massive management discount being built in that, I know you make money out of selling gold, but I know you're going to take all of my money, you're not going to give it back, and you're going to by someone else's business. So really the money that's been made in gold stocks has been in the second tier ones that everyone's betting are going to be bought out by the big guys. So,
it's a bit like iron ore, again, buying at the top of the market.
That's right.
And I find the rather amusing thing about BHP and Rio is listening to these sage CEOs who are doubtless fantastic managers. The companies are very profitable, but there's a whole load of stuff outside of their control. Timing's everything.
Yeah.
You know, they don't control the Chinese economy, the US economy, the European economy, commodity prices. So at the end of the day, we'll listen, but really, at the end of the day, they're going to be a victim of whatever cycle there is.
In. And of course, none of them are ever prepared to admit really that there's ever any end to the iron ore cycle.
Well, they're marketing machines. They market commodity prices.
Yeah, and they have to be.
But
of course, you know, that has a lot of bearing on when they connect.